is saying, look into the CARE Act, what's called the forbearance agreement on your mortgage. Okay, so let me define forbearance. And I know a lot of people might be getting sick of this, but I'm going to keep beating you upside the head. And if you don't take advantage of this, I give up. Okay, so, and I'm going to go over that in a minute. All right, so what the forbearance is it's not allowing you to just say, I'm not making my mortgage payments. What it's doing is basically doing like a lot of the government programs do, is it just kicks the can down the street. So what it's doing is saying, you know what, we'll let you not make next month's payment, or the following month, and even the third month. You don't have to make that payment right then and there. But on the fourth month, we need you to send in all 4 mortgage payments to bring your account current. And if you don't, we have the opportunity to possibly start foreclosure proceedings on you. So that's kind of what's going on right now. So please, before you sign that forbearance agreement, I know you're probably stressed out and just saying, you know what, I'll worry about it then. Please don't kick the can down the street. I have an easy program for you guys out there. If you have an FHA loan or a VA loan or a USDA loan, you could be in luck. And I've done this for 32 years now. In this program, many times you see an ad and you're like, that's too good to be true. Or it's too much of a hassle. Or this is going to be a bait and switch. Let me go over the guidelines with you in regards to what this program is I'm talking about, and you decide if it's good for you. So here's what we're going to try to do. Your mortgage payments, okay? We're going to try to bring those payments down for you, as well as help you maybe miss 1 or 2 mortgage payments. How do we do that? Well, if you have an FHA loan, a VA loan, or a USDA loan, and you meet these qualifications, you should be eligible for this program. There is no sleight of hand, there's no bait and switch. This is a program that we have that's called Streamlining. Okay, so let me go through this with you. If you have an FHA loan, here's the qualifications to qualify for, see if you're eligible for this Streamline process. And let me reiterate, what it's doing for you is it's allowing you to skip 1, possibly 2 mortgage payments. Yes, skip them. Because let's say when your payment is finally due, your first payment, it's going to be the new payment. And to qualify for this program, your payment has to go down. And I'm going to show you how and why. So to qualify for the FHA Streamline program that we have, you need right now a 640 credit score. This is normally, all these programs are normally a 580 credit score. But because the world's in shambles right now, especially the mortgage markets, all of the lenders are requiring, well, not all of them, almost every one of them is requiring a 640 or more. And if you followed Chase or Wells, I think it was Chase and Wells Fargo, I think it was, the other day, they increased their credit scores to a minimum of 700 on basically all their programs. All right? So, to qualify for the FHA Streamline program that we have, you need a 640 credit score. All right? If you currently have an FHA loan, you can only do this if you currently have an FHA loan or have a VA loan or have a USDA loan. So if you currently have an FHA loan, you've made at least 6 payments on that loan. So let's say you took it out 6 months ago, you still have to make 6 payments. It's not 6 months in the program, you have to make 6 payments. Okay, so you had to make at least 6 payments. Income qualifications, there are none. We don't even validate your income. We don't need pay stubs. We don't need W-2s. We don't need anything. Appraisal, we don't need one. What we use as the value is whenever you took out your original loan, that's the value we use for your property. So we don't need an appraisal. All right, so here's the big benefit, the rate. To qualify, you have to have a 640 score, 6 payments, at least 6 payments in the loan, no income, no appraisal, but your rate has to go down 0.5% than where it is today. Okay, I've been quoting mortgage rates on all these programs with a 640 credit score right now at 2.875 with an APR of 3.432. Okay, so 2.875 is where we're at right now. So that means if you have a rate at 3.375 or higher, you should fit. Okay, so now let's go over to the VA program. It's basically the same thing. You need a 640 credit score, all right? You need to have made at least 6 payments on your loan or more. Income, we don't need anything to validate it. Appraisal, same thing up here. We use, when you originally took out your VA loan, we use that last appraised value. And again, on this, your rate has to go down at least 0.5%. That means you need currently today 3.375% on your current mortgage rate or higher, and you should qualify. Let me recap these real quick though. This is where it might get a little confusing. I need you to have made at least 6 payments on that loan. However, in the last 12 months, so if you've had it for 12 months or more, you cannot have missed a payment in the last year. Okay, so you might say, well, I had a foreclosure 3-4 years ago. I had a bankruptcy 3-4 years ago. Doesn't matter. All that matters is you have the score. You've paid the mortgage payment on time for the last year, at least 6 months payments. You don't need an appraisal. You don't need income. You don't need anything. The bankruptcy, foreclosures, and all that are irrelevant. So that is that. Basically, it's the same with the USDA loan. There's millions of people out there with USDA loans. Same criteria, 640 credit score. On this though, you had to have been in the loan for at least 12 months and made 12 payments. That's the only difference between these programs. Income, we do need income. And the reason being is USDA has an income qualification parameter. You cannot make or exceed a certain income level. So we do need your income, but there is no debt ratio calculations. We just need to prove that you still are under the threshold of the USDA income guidelines. You don't make too much money. You do not need an appraisal, and the same thing holds true on this one. Your rate has to go down at least 0.5% from where you are today. So to recap, this is the easiest refinance program you're ever going to run into. So again, if you have an FHA loan, meet this criteria. If you have a VA loan and meet this criteria, or you have a USDA loan currently and meet this criteria, please call me. If you don't, if you have a conventional loan, I'll go over some guidelines with you tomorrow and how you might be able to qualify with an easier program than normal on conventional financing. So if I can be of any help, please reach out to us. You can reach me at 844-775-LOAN. That's 844-775-LOAN. Or find me on the web at thefrioteam.com. Frio is, let me give you, just make sure you got that. Frio is F-R-I-O. So thefrioteam.com. Or shoot me an email at dfrio@preferredrate.com. God bless. I wish you well. I wish you safety and health. And God bless. See you tomorrow.